Now, most of you already know that earnings help us keep track of what companies are performing, or companies that we invest in the stock market are performing. These are the kind of results that shows us if our investments are still worthwhile or not. So what happens, or what usually happens, is that analysts, or so many analysts, come out and of course make their prediction on what they expect a certain company to perform. And should it happen that that company, when they report their earnings, either quarterly or yearly, they beat what analysts expect, then the share price of that company, chances are high that obviously it will surge. Whereas if it does not happen like that, meaning that if the companies that we invest in miss on the earnings, and that is of course on the revenues they generated and the earnings per share, then it means that obviously the share price, or their share price, or that specific company's share price, will drop or will plummet, which is something that is not good, and something that everyone in the stock market who is investing in a company, they don't want their company to report poor earnings and fail to beat analyst expectations in terms of the revenue they generated for that period and the earnings per share. So with that, ladies and gents, Sibanye Stillwater is one of the companies that obviously a few weeks ago it reported their annual 2022 earnings or financial results, which, ladies and gents, not only did they miss on the earnings per share, but obviously they also missed in the total revenue they generated for the year. Because for the total revenues, you'll know that they generated around 138 billion rands, which was 5% lower than what analysts expected. Same goes to the earnings per share. They reported an earnings per share of 6 rand and 50 cents, which was 21% below that what analysts expected. This is something that obviously it was not good, but nonetheless, one thing that is resulting in the shares of course Sibanye to surge by in fact 13% last week, or ended last week up over 13%, is the fact that the of course share price target that these analysts expected, it's still higher than where Sibanye Stillwater is trading at right now. And that is, of course, so many analysts have got an average price target on Sibanye Stillwater share price of around 55 rand. So regardless of Sibanye Stillwater missing analyst expectations, regardless of Sibanye Stillwater missing on terms of the earnings per share or on the profitability side of the business, analysts still expect or still have an average price target on this company of around 55 rands. And looking at where Sibanye Stillwater closed Friday trading at, it is still a good opportunity for you to scoop in some few shares of Sibanye Stillwater, because on Friday this company closed trading just over 44 rands per share, which is something that must just show you that obviously it is still a good opportunity for you to go scoop in some shares. Now obviously another thing that was not that good on those earnings, it was when Sibanye indicated that of course for the year 2023 they issued a guidance of saying that they are planning to report total revenues of over 140 billion rands with an earnings per share of just over 8 rands. So as analysts for this year 2023, they were expecting, or their target was obviously what they had projected in terms of the revenues and the earnings per share was over 143 billion rands of revenues with 9 rands and 23 cents earnings per share. So getting to see obviously that again this year, chances are Sibanye Stillwater is missing analyst expectations. It is something that is worrisome to obviously those that are investing into Sibanye Stillwater. But like I said, one of the good things that obviously we read from the earnings, which is making the shares of Sibanye to surge, is of course the target, or the price target which analysts set, because they never revised their price target. They still have an average, or analysts still have a price target of around 55 rands per share. I mean, on these targets, the most bearish, ladies and gents, analysts priced Sibanye at, of course, 29 rands or just over 29 rands, whereas the most bullish analysts said that Sibanye in the next 12 months would be probably trading at 80 rands per share. So on the average price target for Sibanye, it is just over 55 rands per share. And as I've said, that, ladies and gents, offers an opportunity to those that go in and scoop more shares. I mean, personally, I own Sibanye, and on Friday when the market closed, I was up 3%, which is something that is obviously incredible to see my Sibanye holdings turning into green after Sibanye in the previous week surged by over 13%. Now, before I forget the house rules, you already know that this video is just an entertainment video and not a professional financial advice video. And I really appreciate if you can just hit the likes button if you are enjoying the content that I'm giving you about these 126 billion mining stock, which ended last week Friday, or which ended the week last week up over 13%. So if you're enjoying this content, I'll really appreciate if you just hit that likes button, as it also helps with YouTube's algorithm. Otherwise, if you've not subscribed, I'll also encourage you, or like, if you can just subscribe and click or hit that notification bell, so that at least to get notified by YouTube every time I drop a new content. So yes, or Sibanye Stillwater is one of the companies that is on my ZA portfolio. But yeah, I mean, this company, one of the reasons why I found myself investing into this company, I felt like it is undervalued when you compare to the companies that are in its industry, that is other mining companies that you would find, or precious mining metal company you would find in the, of course, Johannesburg Stock Exchange. So personally, one of the reasons why I started investing into this company, it was because they, even if you have to go and check for things like their PE ratio, you would notice that obviously it is lower comparing to the most average companies in its industry, which is what makes it look attractive to me, and it resulted into me obviously investing into this company. Otherwise, another thing that made me to invest into this company is because it pays some good dividends, right? This is a company that pays some good dividends, which is why I like it, because not only do we get to see, or I'm hoping to reap the good returns from the share price as it surges, but it also pays some good dividends. I'm going to be paid some good dividends along the way, which is what makes it, of course, more attractive. So yes, this past week the shares of Sibanye surged up over 13% for the entire week, which is something that is incredible, because the share price recovered. I mean, if I'm not mistaken, on Monday when the market opened, it was trading around 39. Monday was a holiday. On Tuesday when the market opened, it was trading around 39 rands, or just over 39 rands, and it finished on Friday trading up 44 rands, or over 44 rands, which is something that is incredible, and something that must just show you that this is a company that obviously it is expected to do well, regardless of them missing their earnings, regardless of course them also missing, of course, or not meeting the projections that so many analysts are expecting. Analysts on the price target wise, they are still pricing, or it still has an average price target of 55 rands, which obviously it's a good price target looking at where it's currently trading at. And now, like I said, one of the things that personally I like this stock, I like it for not only maybe the gains that I can see as it heads to that 55 rands, but I like it because also they pay some good dividends. I think the last time they paid dividends was it around March. I received some good dividends from this stock, which is something that is always good. But personally, you will know that obviously my investing strategy is, of course, investing into for capital appreciation rather than, of course, chasing dividends. Dividends to me, it's a bonus, but obviously I can't say no when companies pay good dividends. I mean, I've got also a company like Sun International on my ZA portfolio, which also pays out a good dividends. This is a company that is, ladies and gents, it has been doing so well in terms of their earnings, or they did so well on their earnings. And not only that, they, from last year, they started paying, of course, also dividends, which is something that is good, because not only are we seeing some good capital appreciation from share price rising, but we are also getting to receive good dividends from Sun International. So I'm very excited when I invest into a company that not only gives me appreciation of my money, but it also pays a good dividend. So yeah, Sibanye Stillwater is that company that obviously, yeah, the share price wise, they are expected to, they've got a set price of 55 rands, and they also pay good dividends. So it is quite a good company. So yes, for year 2023, analysts were expecting Sibanye to report, or are expecting Sibanye to obviously at least report total revenues of over 143 billion rands with the earnings per share of 9 rands and 23 cents. But they said, or what they're expecting is, of course, an EPS, or earnings per share, of over 8, or just over 8 rands per share, with a total revenues of just over 140 billion rands, which is, like I said, a bit lower than what analysts expected. But nonetheless, analysts are still remaining bullish, which is something that obviously it is incredible, and it is the one thing that makes me to obviously want to keep my holdings onto Sibanye Stillwater, because analysts are expecting it to perform well. Now, one of the things that is hurting, of course, the Sibanye Stillwater's earnings is, of course, the crisis we have of load shedding in South Africa. I mean, you all know that load shedding, it's one of the things that resulted in Sibanye Stillwater sometime at a certain point last year to come out and say that they will end up cutting production due to this load shedding, which is something that is not good, because it means that when they cut production, of course, it will have a huge impact on their revenues, which is something that obviously we are going to see Sibanye Stillwater not generating enough revenue, or as much revenue as they should, because of load shedding. So as long as we are still continuing to have load shedding, I know that, of course, revenues or companies' earnings like Sibanye Stillwater or other mining companies are going to be impacted by this, which is something that is not good. So as long as we are still going to have load shedding, we're still going to have companies to struggle with their earnings. I mean, in the retail sector as well, is a sector where we are seeing, of course, retailers or big giant retailers in SA coming with mitigation measures, trying to put them out there so that they can try to cap and reduce the amount of money they can lose, which, yeah, I think they're still being hurt regardless of what they are putting or the measures they are putting out there. So we know that load shedding it's still in our midst, and chances are it's still going to be with us for some time, meaning that the companies that we invest in the Johannesburg Stock Exchange are still going to, some of them or most of them are still going to be hurt by this load shedding. Otherwise, if we can solve, or the day that load shedding gets solved is the day that, obviously, I personally believe that obviously we are going to see companies that we invest in doing well, because there won't be load shedding, or there won't be power cuts or power outages, which makes these companies we invest in to come with mitigation measures which cost them money, which is not good for them. Otherwise, with all that, guys, I just thought I'd just give you this quick updates about Sibanye Stillwater as to why is it we saw it finishing the week up over 13%. If you enjoyed this video, don't forget to hit the like button, comment, and subscribe. And once you subscribe, don't forget to hit or click the notification bell so that at least you get notified by YouTube every time I drop a new content. Otherwise, that's all from me, and I wish you nothing but the best in your stock market investing journey, and God bless you all.